Hey traders, Nick Sheen here looking at pot stocks, cannabis stocks, whatever you want to call them. Before I forget, at the end there'll be a subscribe to this channel, YouTube. It's free. Go ahead and do it. I do push out videos all the time. So the conversation today was with a few friends about pot stocks and which ones to catch, that they were falling off a cliff. So here's a few things I know. Number one, I'm not an expert in cannabis or their stocks, but their charts are charts, and we can speak to that. I do have an idea, but no experts here. And in fact, the second part is that I don't think there are any experts in the field. And if somebody thinks they're an expert, then they're probably going to make a mistake. This is a highly volatile environment because it's all brand new. It's not even legal in the US. So keep that in mind. How could you know something for certain when it's still illegal? So maybe they'll make it legal on the federal level, maybe not. So that would be upside though. All right, so this is not what we're looking at here. MJ is one ETF, but it's pretty hard to, so I'll speak to specifics. The highest, the one that was wildest was Tilray. This was the one where it spiked to $300 in a couple of days on a huge, massive short squeeze. So this would serve as a definition of a short squeeze. Can you imagine? That's why shorting stocks, unless you've got bazillions, is so dangerous, because the downside risk is unlimited. What does that mean? When I buy a stock, I'm risking 100%. I cannot lose more than my money. It's 100% loss. When I short stocks, the losses are unlimited for as long as the stock is rallying. Can you imagine having shorted it at 100 and it rallied in 2 days to 300, and having that had covered because somebody called me, hey, you got a margin call, you're going to jail if you don't cover it, and I cover it at 300, and now it's at 29, 30. That'd be devastating. So even though you were right at 100, but the way somebody, if you don't have a big enough bucket of money, then the margin calls are very harsh. So somebody like Soros can short it until end of time. So anyway, they only need to be right once when they're short, but you have to have a bucket of money to do that. So anyway, back to which knife I should catch. Not this one. Why? Because something's wrong with a chart that looks like this. Okay, and I don't have any fundamentals. I don't know, the leadership is still there. They just reported earnings, and that just ugly chart. So broken chart, maybe or maybe not. Broken company, I don't know. So I don't touch it. The cream of the crop there supposedly is CGC, because they had $4.5 billion in the till. But do they? Because they had some sort of a funky deal that would cost them about that much with somebody. So the money came from STZ, Constellation. So I'll give STZ credit that they have oversight and that they're not squandering away $4.5 billion they just gave them. So that said, technically, I did note a tight squeeze, and I did a whole video on it, so go back and watch the video. Nothing has changed since I did the video. It's a little bit lower, but really the spirit, I bet you I said I wouldn't get out until I'll see what happens there and there. So this stays the same. Unfortunately, if they lose this, then they might trigger a bearish pattern that probably says a lot lower to go. I'm not saying it's going there, I'm just saying. So maybe that's a knife to catch. The least I can say about it is if I'm long still and I haven't bailed, this is not the time to bail yet. I'll probably put a tight stop below here maybe, or below here somewhere. I don't know. It all depends on personal preference and where I got in. So another one is Kronos. Kronos is definitely had a tight range, and I posted it before. That's why the lines are there. I usually draw the lines, and I draw both possibilities. So I draw them before the breakout from either side. And I say usually I would chase the breakout in either direction. And this, if it had broken up upside, I would have booked first leg here and then reloaded to see if they can do that. They couldn't. They have a gap up here they left open. Same here. I had two situations. So here I had two situations, and the downside is unfolding. The first target is met. This is the yearly. Let me see. This is 1 day, 1 candle per day, and 1 year worth of data. So according to mathematical data here, this is the most contested line of the last year. What does that mean? Even though it went up to there, most of the action happened around here. This is the point of control as described by the volume profile of this stock. So bulls and bears love it. So they'll fight over it. If machines are trading, the machines are going to be active. What does that mean? It's congestion. What does that mean? It's support. So again, if I'm long this one, I wouldn't bail here. But is this the knife to catch? I don't know. Technically, it could go lower, but it's an okay knife to catch. Little stronger than the CGC because of that fact. It's a point of control and it's higher lows still. You know, it has a lot higher. It's got a lot lower values that they rejected. All right. So what else is there? ACB, Aurora. Hard to say. This also is a decent candidate because of where it is relative to its recent lows. At least the last 2 days, it's been higher than, CGC was lower. Was the other one lower too? Yeah, see, 3 lower, tack. This is the only one that, whoops, I went 2 back. Where are we looking at? Okay, so this is ACV Aurora is the only one that has had higher lows. Lower highs, but higher lows. So it's coming to a point, and there's going to be a move soon. So this is the well-consolidated zone. So let's, so out of all of these, is there another one I'm missing? So out of all of these, this would be the better candidate. At least it's behaving best in the last few days. I don't know about their fundamentals, but I can tell you one thing. I know that all of them are astronomically expensive, like from a PE perspective, but that's not the selling point of these guys, because PE is irrelevant at this point. All right, so let me see if we can discern some more information. All right, so let me go to a weekly. It's got enough history. All right, there we go. So now we know that it has had a tightening range, right? Higher lows, lower highs. We already said that. So a move is likely coming. You can see this is a wedge, right? It's wherever. Let's say descending channel wedge, whatever you want. And now it's maybe setting a bottom. Okay, so if they break out of the wedge, they might overshoot higher. I'm not calling for it. I'm just saying that this is one scenario. The other scenario is to break lower, and that would be this cluster of support right here. So why do I say it's a cluster? It's not a hard line in the sand. I'm sure you can find a few hard lines in the sand, but as right now, it's not. So where do I bail out? I'll get too granular. This will be the first place, but I don't know the value from here. 5.7 I'm going to estimate. But there's a cluster here. What does that mean? They had a tough test. They rejected it emphatically, and that was last September. Then they spiked. They crashed in December with the rest of the market. A second test, and this was a legit test because the sentiment was terrible around the whole market. They rejected it. So I can confidently say this is support. It's proven. 1, 2. Big, and here we are. They're not even at it. So if they fall more, I'm going to assume that it's S. You can put a question mark next to it to say, okay, is it? Which means by definition that if I'm long it and I'm still wondering if I haven't sold it yet, yeah, I wouldn't sell it until I see if the outcome of this question mark here. And this was kind of a neckline, but this rally was so insane that really there's no clear neckline. I'm sure if we drill into it, we can find it. So back to bug out moments. Where would they be? First of all, it would be right here, 5.68 or 5. Let's call it 5.5 for round numbers. Okay, because that would be a lower low than a few days ago. Why? The question comes to mind. Also, it's the pivot candle right here. And look at that, this candle right there. So yeah, I'm comfortable with 5.5. Well, look at that right there. So I'm comfortable with a lot of 5.5 occurrences to say 5.5 would be a bug out place. It's like, okay, so I've taken in some, if I'm starting longs, I would want to get out when these happen. Okay, if I'm still in pain and I'm okay taking pain, then fine. So what about the short-term potential of this one? We've got lower highs. You can draw lines anywhere. I mean, and then you say, okay, maybe this will happen. But you have to be honest with yourself and know that there are 2 sets of lines, one that goes up and one that goes down. So then the ideal scenario is to wait for breakouts and chase them. So here, there's no clear breakout here. So you'd have to get more granular. This is a 15-minute chart. So clearly, I would put an alert at 5.98, well, 6 for round numbers, come on. And this would be a really important spot. So let's say I get in here. This is where I trim or get out, or at least move my stop somewhere. What the heck is that, right? So this is pretty important. Pivot. And if I look left, I bet you I find more instances of it. There's one. And look at that. Oh my gosh. So give it all back. So somebody could argue that this is definitely resistance, and they'd be right. Short term, this is 15-minute candles now, okay? Completely different conversation. Right here was a pivot, right? They break out, they tested to try to hold, they couldn't hold, they come back to it, now it becomes resistance. Until proven otherwise. So they may go tick, 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 bump out of it, hit this line right here, bump out of it if bulls are lucky, then hit that biggie zone right there and see what happens. That's a big question mark. If by any chance they get out of here, then you can talk about these guys. So anyway, these are my thoughts on pot stocks. I'm not an expert in pot stocks. I would say the same thing about any chart on the planet. These comments all apply. This is a 5-minute chart if you want to get even more granular with ACV, but basically the point is some of them are falling off a cliff with no stabilization. This is the only one that I see out of the 3 I mentioned that have stabilization. You can see 3 candles are not red. I mean, they're red, but they're not consecutively lower and lower. Like CGC is not falling. I mean, is not finding a bottom is what I'm trying to say. And Kronos, again, MJ, where is MJ on the daily? MJ is okay. So, but I don't like trading the ETF. I'd rather take a bet on one specific. I have no positions in any of these. This is just a discussion I had with a few friends. All right, next signing out. You know where to reach me.